Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, James DiBiasio. If you enjoy the content we're putting up here, give us a like, subscribe, let YouTube know. My guest today is Jennifer O'Rourke, Director of Innovation, Strategy and Design at DTCC, the organization responsible for clearing and settling all securities traded in the US. She is at the forefront of DTCC's experiments with blockchain for clearing and settlement of tokens, public and private chains, and support now for the possibility of a digital dollar. Jennifer O'Rourke, welcome to DigFin VOX.
Thanks for having me, James.
It's my pleasure, and I'm very excited to have this chat. You're in the hot seat when it comes to innovation and financial infrastructure. Tell us a little bit about your job as Director of Innovation for Strategy and Design.
Yeah, so at DTCC, we've been really targeted in the way that we're determining how innovation affects financial services. You know, we're an industry-owned utility, and so making sure that we're able to support the ways in which the market is changing and how those changes affect our clients is really top of mind for us, specifically because of the role that we play, our mission. So as that, we're really focused on looking at emerging technologies as early as possible. The way that we do that is we're partnered with a technology team in our organization, and the two areas comprise our innovation team together. So we have a business focus that looks at problems, pain points that our clients have through a business lens. And then we're immediately resourced and partnered with our technology area that is able to spin up solutions that we can experiment with and explore, you know, where we're actually building code. And we're able to do this very quickly in our DevX environment. So we essentially have a sandbox that allows us to take these conceptual ideas and play with a bit of code in real life. We're able to do so and then pull our clients in if it makes sense to start testing out some of these ideas. And so because of that, you know, our innovation team has been able to take a real meaningful position in the organization to turn some of these explorations into solutions that will go into production.
You guys have been working on a variety of blockchain-related technology projects for several years. I think some of your first ones probably came out in the early years of DigFin itself. Give me a quick walkthrough. So a year ago, I was talking to some of your colleagues about some of the projects you were working on. Give us a quick walkthrough of what you've learned so far, and then we'll dive into some of the newer stuff.
Yeah, absolutely. So we've been at this for a little while now. Back in 2015, we wrote a blockchain white paper as we began this exploration back then. This led us to really focus on building out our now innovation office. And so during that time, we've been able to explore a variety of crypto-based and security tokenization solutions. In particular, I think your audience will be familiar with our Project Ion and Project Whitney. These two projects, respectively, we're looking at the ways in which DLT can facilitate, you know, first as it relates to Project Ion, accelerated settlement and additional settlement windows. And so we wanted to look at how tokenizing security assets and leveraging networks could provide those efficiencies, you know, that we've been evaluating within this technology structure. And then second to that.
Okay, good, please.
Yeah. So, and then second to that, our Project Whitney, which we now refer to as our DSM. So Project Whitney is actually looking at how DTCC can support the primary market with tokenized security issuance. And we're now, on a path that's focused on moving that to production as well.
Just quickly, DSM stands for what?
This is our digital security management.
Okay, thank you. Now, why blockchain? I hear often that maybe this is just, it's an append-only ledger. It's not that flexible. It can be in the public versions that we've seen, like Ethereum or Bitcoin, that's very slow. Why this technology? Are there other ways that we could achieve things like atomic settlement with other type of relational database technologies, or is there something about the blockchain stuff that creates something that's unique?
Mm-hmm. I think that the answer to your question is there are other options, and the onus on us is to explore these options and determine which capabilities each technology solution and architecture in many ways is a best fit for the problems that we're trying to solve. So, for example, there are going to be other, distributed database solutions that could be applied in, light of solving these problems. But when you start to then add on additional capabilities like tokenizing a security and providing smart contract or programmable functionality, to a transaction, then you start to really unlock some of the power that distributed ledger technology provides. And so it's that aggregation of a variety of capabilities that have pointed us to this particular technology. But I do think that it's important to pull out, the point that you're making, James, which is that blockchain is in many areas a solution in search of a problem. And so we've taken a very critical view when we evaluate our use cases to ensure that a blockchain solution that we are applying is a very tightly scoped one for the use case that is not just putting a solution on a chain, but rather understanding what additional capabilities and therefore value that we can unlock by putting a solution on a network or on a chain.
Very interesting. You're now working on something called Project Lithium, which is looking at the potential for a digital dollar if that emerges. What is the relationship between you guys as a clearing and settlement hub and the prospect of a digital dollar? Where do you come in theoretically to support that? And of course, we'd love to hear more about Project Lithium.
Yeah, definitely. So just to set the table here, when you think about a central bank digital currency, a central bank digital currency could be applied to the banking system in two ways, in a retail application and a wholesale application. So central banks around the world are looking at both of these applications, and DTCC is focused on the wholesale application because obviously that's where we fit into the two-tiered financial system. So within a wholesale application, we would be looking at how a central bank digital currency would come into the ecosystem, issued by the Fed, and then be utilized by our clients, settlement banks, custodians, etc. And as we look towards that future, which still is a ways off, but as we look towards that on the horizon, we want to make sure that we're going to have the settlement optionality to take that in when the time is right for us to do so. And so we're exploring Project Lithium as a means, to support that. But we're also thinking about other ways that we're, modernizing our settlement rails. And again, with the goal in mind of providing optionality for our clients here.
Because in the US, in the securities market, now the big thing is moving from T+3, so 3 days after a trade to fully have DVP, delivery versus settlement, down to T+2, right? That's sort of like the big project in the US right now. When you think about a digital currency or a wholesale CBDC, how necessary is that in the sense that maybe America just has very legacy, outdated infrastructure? It needs to work on those things to achieve the same outcomes? Or is there a leapfrog here that a CBDC could represent?
So it's interesting you say that because right now today, DTCC has the capability to process transactions same day, T1, T2. And so we've had those capabilities for years. However, the industry itself, because of clients' preferences around trading strategies, funding strategies, and just general kind of market makeup, for those reasons, the industry itself has preferred to settle, within some of the longer cycles, which we support. And now what we're hearing is that the benefits and capital efficiencies in particular of accelerating settlement are a motivating factor enough to coordinate the participants in the industry to look towards some of these earlier settlement cycles. That makes a lot of sense to us. And like I said, we can support that today, but what we want to do is be forward facing in terms of how we support that. And that's where experimenting with some of these technologies and the additional functionality that DLT enables comes in. Now, to tie this back to Lithium is Project Lithium, and essentially the idea of operationally supporting a central bank digital currency that would right now be explored through Project Lithium in a real-time gross settlement fashion. So we would be looking at same-day settlement. And the difference between comparing a real-time gross settlement that Project Lithium would facilitate and the fact that DTCC can already facilitate, same day, T1, T2, et cetera. The difference between these two really is going to be the asset that is moving through the systems. So obviously in Lithium's case, central bank digital currency. And so the focus of Lithium becomes more on taking in tokens from the government and the Fed as the external source, and bringing those into our organization on behalf of our clients to facilitate that particular type of assets settlement. And then the functionality of doing that in accelerated or real-time or same-day fashion is one that, although it runs parallel to some of the capabilities we have already, is distinct because of the asset that is actually being brought in for post-trade services.
It's also distinct, though, that in as you say, real time, these things can be not T+0, but T+ seconds or minutes.
Yeah.
But the industry is still going through, I guess, it's a big deal for them to go from T+3 to T+2. So how much demand, or what would have to happen, do you think, for a digital dollar to be taken on in a way that people would be prepared for instant settlement?
Yeah, it's a really good question. It's one that we spend a lot of time thinking about. So the first thing that would have to happen is that the Fed, and not only the Fed, but the Fed in conjunction with the Treasury and a congressional approval, after, receiving congressional approval. So there would be a significant government process that would actually initiate the creation of a central bank digital currency. And we still are a little ways off before we see that coming down at us. So first of all, we'd need to see this initiated on the public, on the public side. Then once we do, to the crux of your question here, James, is that we would need to take this in, this asset in, under the policies that were created by the government. And at that point in time, we're going to have an idea of the utilization from our clients. I think we can speculate about interest, because we are seeing significant interest, to access these digital assets and participate in these systems. But when it comes to the actual uptick, we're really going to have to see what that means to not only our clients, but their clients. To your point, when you have immediate settlement, it's not it affects all elements of a trade life cycle, clearly, but I look towards the execution segment of the trade life cycle in particular, because considering what a end clients' collateral management strategy, or their trading strategy in conjunction with all kinds of margin and collateral efficiencies. Those decisions will be made at execution. And so it'll be very interesting to see the participants, that are more focused on that segment of the life cycle and what it means to their trading, funding, and settlement strategies. And then we position ourselves at the post-trade settlement area of the life cycle to be prepared to take that in, whatever it looks like. And so our perspective here is to ensure that when the government says central bank digital currencies will be issued, at this time and in this manner, we are able to take that into our systems and support that for our clients, regardless of how and when we see that coming down the pike.
Yeah.
But I think it will be very interesting to watch some of the market adjustments that are made earlier in the life cycle around execution.
Because I'd like to get, it's very theoretical at this point. I'm sure you wouldn't have any concrete answer to this question, but maybe you've got some idea, or maybe people are beginning to ask this question, which is, it's the chicken and egg question. So when I speak with big banks, for example, about what they want to do with tokenization, which is a very exciting thing. I mean, there's a lot of really cool use cases for putting securities in a purely digital format from A to Z. But they will often say, but we're waiting for CBDCs because we need a cash leg to settle the securities leg in this format. So they sort of kick the can to the governments, essentially. But at the same, so you're working on building that, but at the same time, you need, if you're going to develop the digital cash format, you need tokens representing securities to do something with. So do you have a sense of building that ecosystem? Not just the nuts and bolts of the plumbing that you focus on, but I guess the use cases, the demand. I mean, do you get into any of those questions?
Yeah, so we appreciate that this is there's a facilitation between a natively digital asset like a central bank digital currency, and then a token that's created to represent a security that's already been issued. And to your point, when we're seeing these different use cases structured, we're accounting for both of those things. So how do we take a digital representation of a security and then a cash alternative, a digital cash alternative, and think that through? And so we're, when we build out the prototypes that we're experimenting with in earlier phases of many of our projects, we're able to hypothesize through a couple of different scenarios, because to your point, we don't know exactly what it's going to look like. So what we need to do to ensure that we're prepared for all of the variety of options that this could look like is to experiment with a variety of different models of a particular use case. We're being very thoughtful about this in the company. Obviously, we're doing work with cash alternatives like central bank digital currency through Project Lithium that we're talking about today, but we're also exploring separate to Project Lithium, stablecoins and other capabilities that we want to have within these IT platforms. And that exploration, or rather, I think the strategy that we are deploying for this type of exploration is foundational to ensure that there aren't any significant gaps in our experiments. So we do like to come from a position where we recognize natively digitized tokens and security tokens that need to be issued to represent those that are being held by a variety of different participants, thinking about how they can actually interact together and what are the intended and unintended consequences when they do so.
Yeah. So you've raised two super exciting areas to talk about. One is stablecoins, but I'm going to put that aside for just a minute and maybe just focus on that last piece that you mentioned, which is interoperability. This is everybody's favorite buzzword, anything to do with networks, right? Now, DTCC, you clear and settle things in US dollars. And so foreign investors and foreign banks and brokers are, they're obviously owning and trading US securities, but they're doing it in dollars. So you don't have to worry about whether they convert that back into euros or yen or something else. But when it comes to these sort of blockchain networks, what are the interoperability questions that you're looking at? What are you coming up against? Let's say if the ECB comes up with a digital euro, would you, how would that interact with you? Or if it's a private stablecoin that, it's a USDC or some other version of that, where do you see those touch points where a digital dollar that you are providing infrastructure for could rub up against other protocols? It could be a commercial bank's own internal coin or something like that. Just get a sense of where do you see those boundaries, those frictions, and do you have a sense of what interoperability could mean?
Yeah. So you're right. There's going to be some really interesting experiments coming up as we start to look at cross-border explorations around central bank digital currency. And there are some organizations that are already doing that in Europe and Asia. And so within the central bank digital currency vein, it's very interesting to watch central banks that have been looking at central bank digital currency for a little while now mature their exploration to really focus on cross-border. So that need is absolutely there. From DTCC's perspective, when we look forward to our roadmap of areas that we will be exploring, we are looking at those type of explorations as well. So we look at Project Lithium as, a very important starting point, but there will be additional explorations that start to touch on these inflection points around interoperability, such as cross-border, cross-currency, et cetera. So although we're not doing that now, we're certainly going to be looking at those.
Are you looking at what's happening in Asia, where there's some really exciting projects going on here? There's something called Project Dunbar between Singapore, Australia, South Africa, and I think I'm going to get in trouble now. I think it's the Emirates. And then also there's something called the MCDCB bridge in Hong Kong, which involves Thailand and the People's Bank of China. I think also the Emirates and of course the Hong Kong MA. So in Asia, you've already got a lot of projects that are looking explicitly at cross-border. Is this something that you're tracking, and are you getting any kind of hints or clues or lessons from what's happening here?
Yeah, so we're very lucky that we've have good relationships with those folks, and so we've been able to keep abreast of the incredible work that they're doing. And I think the area that I know that they're focused on, and that really catches our attention, is when you start to look at interoperability from a technological perspective, but then also from a standards perspective. And when I talk about standards, the first step of standards is coordination. So getting the participants on the same page in terms of how things will work and how are we actually going to, negotiate some of the distinctions between certain, regulatory geographies and those requirements, and then the need to have alignment and continuity within the process. And so I think this is where DTCC is positioned incredibly well to work with our clients and their offices outside of our country, and to leverage those relationships to bring everyone together to start having those conversations around coordination, standards, and then how that matures into a protocol. And after that point, this is where the technology comes into play. And I think this is what's so important about the experimentation, is because when you consider connecting two networks, whether they be two networks that are on, the same protocol, or starting to connect networks that are on different protocols, you really need to kick the tires on the technology so that you can get tripped up early on the things that you're going to get tripped up on, and then have time to really work the problem on the areas where you need to think a little bit more specifically, again, about coordination and standard making.
Because there isn't really a precedent for this. I mean, the closest thing might be SWIFT, which was set up to address, this goes back to the 70s, right? To address the Herstatt risk in foreign exchange. And, that was at a time when it was possible to kind of, I guess, knock some heads together and create a centralized messaging platform. Now we're looking at, many different governments and private players. So do you have a sense of, when it comes to interoperability and building those standards, you've talked about experimenting and working with these guys. You've talked about the technology, I guess, will be the final arbiter of which one works. But do you have a sense of what will be some of the issues that you'll have to address, and how that process might play out?
Yeah, I think, some of the issues are really going to be underlined by regulatory requirements in different regions. You know, considerations around privacy, how much information needs to be shared in one, jurisdiction versus another is very top of mind. So finding ways that different protocols provide different solutions between who can see what and when and for how long. I think that's where we can look towards the technology and really see the way in which it becomes an enabler of these type of regulatory rules. So first and foremost, looking at this opportunity through a regulatory lens to understand what could be done now, or is there an opportunity to consider the way that regulations may mature in the future, and what kind of impact that could have on standards and thus protocols. I think that there's a lot of focus around the technology, and rightly so, because if you can't make the widgets work, then you have a non-starter. So that makes sense. But I think once we get over that hill, and we're seeing success with that, based on the proof of concepts and prototypes that are coming out of Asia and Europe. So it's not as though this is a problem that the industry is butting up against and unable to solve. But as we see that that work continue to progress, then I think we're going to get to a point where we can start to see the ways that some additional capabilities really provide additional functionalities and might solve for some of the challenges around time zones, regulatory requirements, et cetera, because this is where, again, smart contracts and just the functionality that this architecture provides does allow for very specific rules and approaches that can be provided to very specific participants within the system.
Yeah, and at the same time, programmable money is a very cool concept. A lot could be done, just up to the creativity, I think, of people to figure out how to use it. At the same time, the immutability of blockchain can also be a problem, because if there's an error or a disagreement or a different sense of interpretation, you've got to find ways to allow these systems to somehow have flexibility, have human flexibility.
Mm-hmm. Yeah, it does. And I think, the work that we're doing at DTCC, we're looking at both private and public blockchains. And I think that's really important because, again, we want to make sure that we have that optionality within our solutions. And there are different trade-offs between the different public protocols and private protocols. So when we are looking at the public protocols, we recognize that there is an immutability that needs to be recognized. There's certain, there's certain trade-offs that we're just going to have to be aware of. When we think of the private blockchains and those protocols, obviously we have a significant degree of flexibility in terms of governance. And so the constraint of immutability is not as permanent there. And when you think of, our DTCC and our clients, we are sat in a highly regulated industry. And so we need to be really thoughtful about what it means to look at the trade-offs that the technology applies, but understand that this needs to function within the regulatory framework. And so private blockchains have been very interesting to us for that reason, for the flexibility that they provide. And within that flexibility, there are fewer trade-offs that we have to evaluate in terms of the use case.
Right. Yeah, obviously the big trade-off, what you miss out on is perhaps the reachability of a public blockchain, but that may not necessarily be the mission that you're trying to achieve.
Exactly.
Stablecoins. You and I are speaking about 2 weeks after Terra, which was the fourth biggest stablecoin, flamed out. What at the same time, we've seen commercial banks launch their own stable coins internally, different use cases. We've documented stuff by ANZ in Australia, for example, JP Morgan. So where do you see stable coins vis-a-vis a digital dollar? Obviously, you're not a policymaker, but in terms of, I guess, the clearing and settlement side, is there a difference?
Mm-hmm. I think in terms of functionality, that's quite similar. And so what it really comes down to is the speed at which this asset will start interacting with capital markets and with institutional clients within capital markets. And right now, the market's reacting to the stablecoin event and to, ambiguity around what regulations may be coming down the line towards stablecoins. So although as I said, we are looking to explore stablecoins, and we know that many of our clients do, we're looking at this from a perspective of, we want to make sure that when the market wants us to take in this asset, we are able to do so. And obviously to do so within the regulatory requirements, and those really just go hand in hand. Obviously the market's not going to move faster with regulatory friction. So when the market's at a point in time where we start seeing direct interest from institutions in processing stablecoins through a full life cycle, that's a time that we want to be prepared to process these as well, so that our clients can come to us and say, we want you to take in central bank digital currencies, stable coins, and even these tokenized assets and move them through the post-trade services that you have. I think that when it comes down to how we will take this in, we just need to make sure that all of the options that we could consider are ones that we can provide our clients.
Jennifer, it's been really fascinating speaking with you. Last question, I guess, is with Project Lithium, what are the ways that you're going to measure its success or its viability to go ahead to the next stage?
Yeah, so the way that we are looking at Project Lithium is through a client engagement lens. We're building out a prototype that's going to facilitate real-time gross settlement. We'll be able to take a digitized equity security and then a central bank digital token, and we'll be able to actually run a transaction where these two are exchanged atomically. And for those that aren't familiar with atomic settlement, this is conditional settlement. So in this case, for delivery versus payment, as soon as the digitized equity security is available and the central bank digital security is available, those would be immediately exchanged with finality. Yes. And so when we look at that particular use case, what we're going to be measuring is, one, was it successful? Were there any unintended issues that prohibited us from bringing the technology to a full evaluation? Obviously, we don't expect any of those. But more so, what we're really focused on is the clients that are able to participate in this experiment with us. What's their feedback? What does this mean to the way that they would integrate with a solution like this, the way that it would affect their systems, how they're thinking about implications to treasury and funding for their clients, and what does it mean for them to be interacting with a networked solution as opposed to some traditional technology architectures. So when we really focus on getting that feedback from our clients, those are the success criteria that we're looking for. And then as a result of Project Lithium, what we'll be doing is writing a white paper that we'll publish and share with the regulators and industry will be publicly sharing this towards the end of the year, so that all of the results, whether they were, successful or even unsuccessful, the good, the bad, and the ugly, will be publicly shared so that we can build upon this experiment. And just to add on a little bit more context for those that aren't familiar with the Digital Dollar Project, we're running Project Lithium as the first of 9 pilots under the umbrella of the Digital Dollar Project. This is a nonprofit organization that was spun up by in partnership with Accenture and former CFTC chair Chris Giancarlo. The goal of DDP's work is to take 9 pilots such that they can evaluate the impact of a central bank digital currency to both the retail and wholesale markets. So we're incredibly excited to be the first pilot, to be focused on the wholesale space, and to then be able to deliver the results of our experiment directly to the public and regulators and the industry, so that this can become a building block that we all can move forward upon together.
Yeah, that's great. Obviously, I guess the most advanced in the world is China, which is already piloting its DCEP, which is not based on blockchain. It is a retail version of a CBDC. But I guess that's a very different project. But is there a sense that, I said it was the last question, but this is my last question for you, Jennifer.
Yeah.
Is there a sense that that things in America need to speed up a little bit?
So I think when we look at the work that China's done, it is really incredible to see how far they've come. However, from a design perspective, there are elements that they've deployed that we are still in consideration of. So we had talked about privacy before, and the ways in which the China's central bank digital currency, is very focused on aggregating data about the person that uses the token and analyzing that data. And they've been very explicit and open about this from the beginning. So when we look to experiment ourselves, there will be requirements around privacy that will be different than what we're seeing in China. And so comparing where we are now with the lens of what has been done, I think is really important in terms of that evaluation, because there are going to be principles that the Fed will share with, with us that will focus on privacy and preserving that which we are very accustomed to here in America. So from a exploration point of view, I think, yes, it's quite notable to look at how far that they and other central banks have come. But as we look towards their work, we're able to evaluate some of the requirements that they've incorporated into their design, and then take that to determine if those are aligned with the principles that we would deploy here in the States. And in doing so, we're able to, build off of their work as well. And I don't think that's, I look to that and I see that as a benefit, being able to, consider results that have already been achieved and then bring those into our design, our design elements and design thinking as well is, I think, quite important.
That's right. Let the first movers learn some lessons.
Exactly.
And take the best, hopefully, from what they've already accomplished. So, yeah. Jennifer O'Rourke, thank you so much for joining me today. It's been a real pleasure having you on DigFin VOX.
Thanks for having me, James.